Hey, what's going on? So today I'm going to do a quick trade recap. It's April 28th. I took 4 trades in the New York session this morning. 3 of them were losers. One was a winner. And even though one was a winner, I ended the day green, which shows how great my risk management was for the first 3 losers, right? So I want to talk about the losers primarily. I'll show you the one winning trade that brought me to a green day. But yeah, let's hop into it. So what I like to do is go to the higher time frame and mark out the previous day highs and lows. And I do that because I normally average like a 1 to 2 R for my profit target. So every $100 that I risk, I'm going for $200. But if price is going towards the high or the low of the previous day, I'll go for that instead for a more generous, for a more generous profit target. All right. So let's go ahead and mark that out. So this was the previous day high and low. I'm going to go to the 1 minute chart because I do trade on the 1 minute chart. I'm a degenerate. All right, cool. So let me make this bigger. All right, bet. So we opened up flat. One thing that I know about my strategy specifically is that it always worked best, or I perform the best on gap ups or gap downs. Whenever we open up flat, I have to be extra patient and wait for the market to show a true direction. So before market even opened, I'm going to pretty much tell you the setups that I'm looking for. And this can go for the downside or the upside, but I'm looking for a strong trend up or down, right? Then I'm looking for a pullback. I'm looking for an internal double bottom if we're going to the upside. Sorry for this crooked ass line. Wait for that neckline. Wait for price to close above this neckline. Enter on that closed candle. Set my stop loss at the bottom of that internal double bottom, and then go for a 1 to 2 R continuation to the upside. The second thing that I'm looking for is either a strong push up, and then I'm going to grab my fib retracement. Okay. From bottom to top, I am looking for price to touch this 0.705 level, right? Got to come down, react. Please pay attention to that. It has to react to the level because that's where I fucked up today. I did a rookie mistake and just got into my position the moment it touched this level. So it has to react, and then you got to see bulls step back in for continuation. For a higher day, that would have been my profit target, and then lower day would have been my stop loss. Okay. So let me jump right into the trade and show you exactly what I'm looking for. Oh, before I do, I forgot to say that I also look for, simple patterns if it's a bear flag or a V-shaped reversal. Okay, so I got a couple things in my artillery that I'm looking for. They're all simple patterns. They're all very simple. I explained 2 of them in like a minute, so that just shows you how easy it is. All right. So like I was saying, we opened up flat. I need to be very patient because my best performances are on gap ups or gap down days. We opened up flat. We began to see a nice little downtrend. Had a nice little accumulation phase right here. I'm still waiting patiently for a nice little trend. So we started trending up. We passed higher day. By the time this happened, I'm thinking we're going in an uptrend. So I'm looking for that pullback as a bear flag for continuation to the upside, or I'm looking for that internal double bottom, which is a very high probability setup, which I will add a little bit more to my position on that one. And then that's my stop loss and continuation for a 1 to 2 R or a big push up, that Fibonacci level, boom, boom, of 0.705. Make sure it reacts to that, and then a continuation to higher day, stop loss, low of day. So what happened right here? We got a nice push up. As you can see, we started pushing immediately down. The thing about the the bull flag, and then the double bottom, the internal double bottom, that normally happens near the high of day or the top of the trend. As you can see, we started coming crashing all the way down, right? So that only left, boom, the Fibonacci, right? So I grab my Fibonacci, I go from bottom to top. I did a rookie mistake like a dumbass, and this is my level, 0.705. I entered immediately without waiting for some type of reaction from the market to see if it even reacted to that level. So it was a quick stop out, crashed out, stopped me out for $215. So the good thing that I did here was I asked myself, and I tell all my clients this, before you enter a trade, it's always good to ask yourself, how much money am I willing to lose to find out if this trade is going to work? So at that point, you are solely thinking about risk and loss, which is our sole duty. The market handles the profits. We handle loss, right? Because the market doesn't know how to stop. If it goes in one direction, it's just going to keep on going. So if it's in our direction that is in our bias, then it's going to take care of our profits. If it's not in our direction, in our bias, we got to take care of the loss, because the market is like a child with a temper tantrum, bro. It's just going to keep on going until it doesn't. All right. So cut my loss at $215. Since I asked myself that question, I accepted the loss. I was still fine emotionally, like no emotional doors opened, and I accepted the loss. So moving on to trade number 2. At this point, I'm pretty open, right? Because on the higher time frame, it looked like it should have been a bullish day, so I kind of held on to the bullish bias. So I'm thinking there might be a V-shaped reversal, right? And a normal V-shaped reversal goes like this, right? Come back, boom, get a little consolidation area, then we continue to go up, one more consolidation area, and it can either pass higher day, or it'll come all the way back down, maintain this stop right here, like it won't touch that. It might like come fucking around over here, whatever, and then go past higher day, and higher day would have been my profit target. So because I was so married to the upside bias, I went ahead and entered here for longs, set my stop loss right there, got my ass swept. I was somebody's paycheck. And then we started coming right back up. So I thought that was the sweep right there. I thought I was done. I thought that was done. So I went ahead and jumped right back in right here. So that loss right there was about, I want to say $100 or $130, something like that. And then I jumped right back in, right? And this one was more of a emotional entry. All right. I did manage my risk. It was like 3 micro contracts. And guess what? I entered right there, went up a little bit, stopped my ass out right again. At that point, I was just done for the day. All right. So I thought I was done for the day, but I can't let shit go. So I went to the higher time frame and I saw my A+ setup. Okay. And what is my A+ setup? Like I said earlier, it's that internal double top for the downside. Boom, break of the neckline, close, stop loss, 1 and 2R, or going to the upside, internal double bottom, boom, break of the neckline, candle close, take that continuation to the upside, 1 and 2R. In this situation, it was the downside. So boom, got a nice little downside, double top, bam, bam, neckline right here. We got a nice little close right there. We entered right here. Let me start marking this shit. Hold on. So this is the stop loss. This is the entry. Okay. Let me make that bright blue. That's the entry. That's the stop loss. And then if I take my handy dandy short position, boom. And then we're going to go for 1 to 2R. See that too? That's 2R. And then my profit target is right here. And we're going to turn that green. All right. And this is exactly where I took profits. And because this was on a higher time frame, this was a much larger move than what I would have got on the 1 minute time frame. So it made up for my loss and some. So those are the 4 trades that I took. 2 of them, well, one of them, they all sucked. Okay. The only one that made sense was this one. And not just because it was a winner. The first trade, I didn't wait for price to react at the level that I expected it to. The second trade, I was holding on to a daily bias. And then the third trade, it was an emotional reaction because I got swept. I thought that was the sweep. And then I was going to go continue higher. And then I got stopped out again. So I'm not just saying that the first three trades were bad because they were losers. It's just the fact that I didn't trade how I normally trade. Like my mind wasn't clear. I was making like little rookie mistakes, which is fine. Self-compassion, self-forgiveness, that's directly tied to abundance and all that good shit. So we try again tomorrow, and it just shows the importance of risk management. Size down, 3 micros is all you need to go a long way. So I hope this video helped you. I broke everything down. If you need any type of coaching, one-on-one accountability, trading community, one-on-one Zoom calls for 30 minutes, tailored coaching just for you, go to strongtrading.com, and I'll see you tomorrow.